All right, good morning. Today we're going to talk again about reading candles, volume, and the use of the Ichimoku cloud, and how that's going to help us all throughout our trade. It's going to help us determine where we want to get into our trade and how to track our trade while we're in our trade to slowly watch as the price could break down and where we would want to get out of the trade and how we would manage the trade if we were taking the trade on margin. Okay, the cloud is especially going to help us out in that area as far as getting the most out of our margin trades and knowing when to get out of the market at the first signs that the trend is changing. Okay, so let's look real quick here let's actually start with Bitcoin. Okay, so we can see here for the last, let's just remove these drawing tools. We'll start again. Probably for about the last 2 weeks, Bitcoin has been riding on this uptrend here. Very noticeable uptrend. You could draw this out on anywhere from the hour to the daily, really. But you're going to get more exact points that the line got touched on the daily here. Okay, so we want to start with that. And this is our trend line that Bitcoin was riding on. Okay. Now, notice how first thing that Bitcoin needed to do when it was downtrending here, okay, we had a nice sell-off here. And as soon as we sold off right here, it started to trade us under the cloud. Okay, so as soon as we were trading under the cloud, it's an indication that we're in a correction or a bearish trend could be setting in. And then right here, we broke out and we broke above the cloud for just maybe like 2 hours, and then we dove right back below the cloud here, and then we decided that we were going to keep trading under the cloud. So until Bitcoin rallied up right here and got above the Ichimoku cloud again, it was still questionable whether it was going to continue down or not. So this was our first indication here, right here, when it battled right through this hourly cloud and got back on top of the hourly cloud. That was our indication that we're going to possibly turn around here. Okay, it faked us out here. This is the same kind of move, but it didn't maintain above the cloud. It broke right back through the cloud. So what we're looking for when we're looking for that change is we're looking for it to come from trading under the cloud to rally back through the cloud and then settle back on top of the cloud and gain support there. Here it didn't gain support. It basically fell right through the cloud again. But right here we gained support, and we decided that we're going to stay trading above the cloud. And so that was the first indication that this corrective trend right in here was ending. Okay? That, along with the fact that this thing had a trend line that it was basically riding on, making lower highs right in there, right there. Okay, so this was a resistive line right here. Okay, so the price was not going to go up and continue up until it made it past this line right here, because we had a high that was made, okay, here, and that's where we fell off. Okay, and then the next high was lower, and then we kept making lower highs again, but here we got enough support that we pushed through the cloud. So now we have two indications here that the trend could be changing, and this correction that we were just in could be over. First is that we broke the line here, this downtrending line, and we made a little bit of a higher high right here. Okay, and we broke through the cloud, the Ichimoku cloud. So that's two indications when the price came to right here that, okay, we very well could have hit the bottom, and let me start considering getting into a long position again. Let me consider buying the bottoms, buying the dips on Bitcoin again. Okay, so that's our two indications there of confluence that we broke this line, we made another little high, and we broke through the cloud. So now that we have changed the trend in this move right in here, now we're watching for a respect of this cloud until it breaks, and that run was over when the cloud broke. And first indication of that happening would be the actual trend line that it's riding on. Okay, Bitcoin came up here and it got established itself above the hourly cloud, and then for about let's say, just about 2 weeks, a little over 2 weeks, 15, 16 days, we found support on this trend line where we tagged it quite a few times. I mean, we hit the support line from where we started here, back here. We hit the support line in here, a little bit closer, like about 1, 2, 3, 4, 5, 6, 7, 8 times that we tagged that line. And it would, it gave us a very sure point to trade off of. Meaning that, we could have played this trade several ways where we just realized, okay, it got on top of the cloud, and so now we want to buy Bitcoin again until this entire move is over. And you could just, buy and hold in this area and just kind of wait until you see that this line is breaking down and that the cloud got broken, and decide, okay, let me take profit from down here up here. Or you could consolidate this price all along the way, where you could literally be trading it on margin, or flipping in and out on waves by really just consolidating the price all along the way. So here would have been the first place, okay, where you could take a high that it made, a lower high, another lower high, and draw a line right across back to support. And so that basically gives you an area that you've now compartmentalized the price and basically wedged it out here, or kind of like, broke it down into a triangle where now that the price is here, it has to do one of two things. Either has to break this green line and trade into the cloud and show us we're going to go down more, or it's going to break this red line and show us that we're going to continue up more. And so you can really track the price bit by bit by bit all along the way. Same thing here. Pull another one of these moves like this, right back down to support. Same thing. Price hits a high, makes a lower high, another lower high until it falls back to support. And then again, one of two things is going to happen, and you react to it. Either this green line is going to break and the trend is going to go down, or this red line is going to break and the trend is going to continue up. Again, set yourself up for a really good play here. And then it did it again, right here. Right here. It did it again. Right there. And it set us up for another good play, where basically we trapped the price between 2 points and we were ready to react on whatever it wanted to do. Okay? If it broke the red line, it was time to go long again and squeeze some more profits out of this thing going up and the momentum while it's going up. If it breaks the green line, then it's time to close all of our long positions and start to look for the sell side. Okay? And then the price did it again another time here, basically consolidate itself. Now these were getting smaller. If you notice, these moves are getting smaller, like they couldn't maintain the same flow over and over again. And then right here, it tried, right in here, it really tried to maintain see, it couldn't expand away from this line as intensively as it was doing before. All these expansions away from this line led us far away from the line where we could consolidate back. Boom, far away from the line where we could consolidate back. But these impulses became less and less, and the momentum and energy in the market just wasn't there to push us further. So the logical thing that the price needed to do was run right into the support trend and really fight for a minute. And right here, all this right here is the first indication that this trend was breaking down. Okay? So really tracking the price, this whole area right in here, there was about, probably like 10 hours to really realize that was going on. Even more, 17 hours. So there was plenty of time to realize this trend line here was breaking down, and now our next line of support is going to be that cloud. So, that's our first indication here. When we're watching this thing and we're watching our move and we're trying to decide how we're going to play this move up or down, we pretty much have a good indication in here, buy it. As soon as it breaks out, buy it. As soon as it hits the support line, buy it. This thing is the momentum to go up, But right here, as soon as we broke this green line that we were riding on for 2 weeks, we chopped around in this area for just a little bit until the market figured out that it was not in a supportive area anymore. And then as soon as we sold into the cloud for the first hour right here. This first hour that dumped into the cloud right here, this candle. That was a really good indication that, okay, this thing is breaking down and it's probably going to break down fast. Because now we broke our support trend. We chopped around in here for like, 15, 17 hours. And then we just basically, started to dump into the cloud here. Now, we didn't have the high volume until the following hour. But if you're aware of the trend and of the relationship between the support and the resistance and the support that the cloud should give us if this line breaks, then you're basically ready. You're ready there to close your positions and maybe get into the sell position. Okay, so right here, this entire trend fell apart first by breaking the trend line, and second by dumping right through the cloud. Okay, so the hourly cloud is no longer a support point of reference. And if you notice now, what we're doing is we're trading under the cloud. We're trading under the cloud. And we are making lower highs now. Okay, so basically now we want to watch this thing in the other direction. Okay, meaning that it fell off here and we had a high up here, a lower high, and then we just dumped right through the cloud. Okay, and we battled our way back up till we basically just about tagged the bottom of the cloud again, and then it ran out of steam. So now we want to watch this and watch its relationship to this line and say, okay, this thing is not going to continue up and be bullish again where I would want to buy it until it breaks this line and starts to trade on the other side of this line and back on top of these clouds. And these clouds haven't even really appeared yet because as they will get projected as the new hours, as the new candles open, these will, another projection of the support will appear in the clouds. So right now we're really watching this thing to say, okay, we broke our uptrend, we sold through the hourly cloud, we are hitting a resistive point now. So where could this thing go? Where could this thing go? Okay, so let's zoom out a little bit and let's look at the entire move that this trend rode on for 2 weeks. Okay, and so this is how we would really break it down here. Now, if you remember when we were talking about this last week, that this was painting a harmonic pattern. Okay, now the harmonics, that's something I would suggest kind of digging into on your own if you find the need to in your studies. They're just another relationship of Fibonacci numbers. Okay, so meaning that this run back up here only went to right here, basically, 0.93, let's say. But what that really is an expression of, it's an expression of this high, this high that we had over here to this low right here on the Fibonacci. It's just an expression that, we have some plots mapped out here. This is the 88.3, 78.6, this is the 1, and it fell between the 88.3 right here and the 1, actually to about 92.6, 93. So this move back up, this is considered a harmonic shark anywhere between 88.3 and 1.13. So, which is basically just telling us that when we see something like this in the market that has this geometrical pattern, that we're going to be expecting a sell-off at this D point. Okay, and it really is helpful to identify things, to kind of put a picture to them so you can kind of maybe spot them and pick them out of the market a little bit faster. But really all the harmonics are is another layer of Fibonacci measurement. Just meaning that, this entire move from here to here went back up about 93% back up, 0.93. And it's really all telling us, we can just actually take the fib from here, that this first move right here rallied back up, a little over 50%. So that's how we get this mark right here. From here to here, that number that shows up there, that 0.528, 0.54, whatever, right where you drop it, that tells us there that this first leg rallied back up 54%. And then it just shows us again that we dropped to a 1.30 relationship of the A point. And then that we rallied back up about 93% of the entire move. So the harmonics is just like another layer that you can kind of look at Fibonacci numbers through. But if you're already expecting that kind of movement in the market and using Fibonacci, you would already have known that information. It just kind of like puts a pretty picture on there for you to recognize. But just meaning that before all this happened over here, this move here, when it hit bottom, we were already seeing how far up it went. And we could tell, oh, it went about 50% and then dumped down again. So then we got to take a measurement of the whole move. And then that's kind of when the harmonic tells us that this thing went up about, not a full one, not to the full one, which would have been 100% retrace, but it was like 93% of a retrace. And then it dumped off. So we had a couple things pointing to us that that was going to happen. And then when this line broke and then the hourly cloud broke, it was confirmation that that was the direction we were heading in. So now where is this thing going to go? That's kind of like where we're at now. We want to basically, map this thing out and decide what kind of action we want to take on it next. So we would measure the whole move now, basically from where it started to where it ended, right about there. Now we have this entire move that we can measure. Okay, and it looks like it already fell down to the 25% retracement mark. It already fell down here, just about here. Now we're also basically compartmentalizing the price again, breaking it down into another area that we can kind of consolidate it and track it. Okay, so now we're expecting a full retracement of this entire move. Okay, but we don't know how far this retracement is going to go. I would think it's going to go more than 25%. When you have a large move like this, I would think that we're at least going to go, down to this 38%. Okay. Now, even deeper of retracement, we could very well retrace down here to the 50% mark. But when we start to look that low of a retracement, we start to realize that we would be going into our 6-hour cloud. And that's actually even our 12-hour cloud is there as well. So we want to consider that, okay? Now that we've measured this entire move and we're expecting a retracement of it, we want to really kind of look at it and say, okay, what's a likely retracement of this? Okay, and then kind of make our decisions there. Because now that we broke this green line that we were riding on, this entire trend is broken. So this entire move is due to get retracement of the entire move. So when I look at it like this on like the 12-hour and the 6-hour, it's showing me that there is a support cloud right about here. Okay, right about here at this mark about 11:10, 11:12, let's say. Maybe about right there, about 11:10. Okay, so there's a support cloud on the 12-hour and on the 6-hour that's resting right at that price point at about 11:10. So that 11:10 mark is our 38% retracement. So if this entire move retraces only 38%, that's pretty bullish. That's where we start looking at, moves making flags or moves making pennants, because this entire move now could very well likely just kind of chop around in this area and hold a 38% and flag up or create a pennant of some sort or some sort of a bullish sign in the market that there's a continuation going to come out of it. And if that happens, that would be the beginning of our trackable Elliott Waves set out of this. Like, maybe we're going to get a move like, sorry, wrong Elliott. Maybe we're going to get a move like this out of it from the bottom up here, come down, hold some sort of a flag or a pennant or some sort of a bullish sign in the market that we're going to continue, and then continue on for another third wave. So I think right now we're getting our number 2 consolidation or correction of this impulsive leg up. So now we really got to look at this number 2 move that we're in and say, all right, let's track it. when is it going to be over? How low could it go? What are our signs that it's not going to hold a good retracement and that we could continue down further and stuff like that. So that's why we want to look at this entire move and put a retracement on it and say, okay, this 38% point, if we fall 38%, we're going to hit a 12-hour cloud, a 6-hour cloud, and possibly even, I think a daily cloud is right there too. Let's check it out real quick. Just about. Okay, we could come down here and tag this daily cloud and also get that 38% mark. So this is a good indication of a bullish continuation right now when we're looking at it, because we're saying, okay, this entire move was a very expansive move. And it went all the way up here, 93% of where it fell off. So now that it's selling down, what's a likely point for it to hold a retracement and still be bullish? Well, the 38%. The 38% is that mark where, where we get that expansive move, but when it only falls 38%, it usually flags up or creates a pennant or some sort of a very bullish sign that there's going to be a continuation because it only retraced 38%. Now, if we start looking at this and we start seeing ourselves getting like a 50% retracement or a 61% retracement of this entire move, to do that, we're going to be dumping into the daily cloud again. We're going to be dumping into the 12-hour cloud again and into the 6-hour cloud again, like dumping past it, below it. So, this is where we got to kind of really look at it and say, if this thing does not hold a 38% retracement and starts to, go for the 50, go for the 61, then on some higher time frames here, like 6 hours and 12 hours, we're going to be going through the cloud, which won't be a good sign. It won't be a good sign. So this is where we really want to, track the price in its relationship to support and resistance here and its relationship to the clouds. Now, in all time frames, meaning that right here we've clarified that this point right here, this 38%, if it goes beyond this point, it's going to be going into the 6-hour cloud, the 12-hour cloud, and the daily cloud. And we're trying to stay above all of those clouds to remain bullish. So we really want to see that the price respects this line right here, this 38%, respects this 6-hour cloud, the 12-hour cloud, the daily cloud. If this price is going to fall now, we want to see it respect this line, okay, and give us like nothing more than the 38% retracement. Now, we could very well bounce right here up to 25 and just, go right through and, continue up. But only a 25% retracement after a long move like that just seems, not that likely. It seems like we need some sort of more of a consolidation here, or a correction, or some sort of a clarification in the market that it decided one way or another. Now, if it decides to continue on here and be bullish right here at this point, well, then the first sign of that would be breaking this line, because we've already clarified here on like the hourly that this thing's having trouble now getting past this point. Okay, we made a high up here, we made another couple highs, and then we just dropped. So when we dropped below the hourly cloud, we came up here, we tagged the bottom of the hourly cloud and established another downtrending resistance point right here. So right now it looks like we're trying for it again. Now let's see our stochastic RSI. We might be getting a little bit of a cross here. We're trying for it again. Okay, we're trying to continue up, but we're going to hit 2 points of resistance. For us to continue up, we have to break this red line and get above this hourly cloud again and look bullish. Now, if this thing breaks this red line and comes all the way up here and then consolidates and respects this cloud again, then we very well could have gotten a very quick correction, and we're going to continue on. So that's why at the end of the day, guys, we really don't know what the market's going to do. We don't have a crystal ball. We can't be 100% sure every single time what the market's going to do. So we want to have like an 80% of an idea based on our Elliott Wave theory and our market psychology analysis and all the other indicators that we're using for confluence. We want to have like an 80% idea, and then basically have do something like this, where we are basically compartmentalizing the price and breaking it down into a viewable window where we can now track this thing on an hourly, and even on a 15-minute. We literally could track this on a 15-minute now. between what we're expecting to see of it if it's going to continue. Okay. Now here, if this thing breaks this line and gets above this 15-minute cloud and trades up here, that's the first sign that we can turn around right here. Okay. But so far, it's been having trouble at this line. We made a point here, we hit the line here, which was also the underneath of the hourly cloud still. And now, we're creeping up here where it has to decide, is it going to push through this 15-minute cloud and consolidate and continue on, or is it going to meet resistance here again? So we can really, track this thing down price by price and get an idea of where we're going to go from here. Okay. So now I will be watching this on, anywhere from a 15-minute to an hour and seeing how it's going to respect this line. And really, now since I didn't get into if I didn't get into a sell position up here in this area, then this would be like, this would be your first, kind of like when this line broke, this would be your first sign to get in a sell position. When we start dumping into the cloud, that's like your second sign of it to get into a sell position. This point right here where it hit the bottom of the cloud and this line, that's another place to get into a sell position, but you might get challenged again right here. So you can see the further you sell as it goes down, the quicker you could maybe get stopped out of your position. The price could come back up and challenge you. So I just want to take a point of reference here where this fell off and where it rallied back up to just about 61% almost. Okay, so I'm watching for some sort of a respect now of this line and see how it's going to react to this hourly cloud, because we want this thing to, if it's going to continue on and be bullish and we're thinking about buying it again, we do not want to buy it until it establishes itself above this line and gets above the cloud again and shows us that it's above the clouds and it's going to start some sort of a support. Now, if that happens, if this thing pops up right here and gets really bullish and gets above this cloud, then we could start looking at it like this, where we want to start taking measurements of higher lows. I mean, if this was a low and this was a low, so if this thing pops up now, then we can draw a support trend on it and say, okay, well, we got 2 points of reference. We're basically, crunching it down into another little area here. If it breaks this line and comes down and hits this red line and comes down, we're going to continue down further. If it breaks this red line and goes up, it should respect this line, this green line, into the future. So there's, just drawing some simple lines and knowing your support and your resistance in your relationship to the Ichimoku cloud, it's going to tell you a lot. I mean, it's really going to tell you a lot on how you can break down the price and track it here along the way. So that's an example there for Bitcoin and what we would want to watch out for now. Okay, we basically have it here between 2 points that it needs to make a decision. Okay, it needs to make. We understand that it's trading below the clouds and it's most likely going to continue down for a bigger retracement of the entire move. But in case it wants to get a little funny here and just kind of get really bullish on us, we kind of got a little map out here of how that would happen. How that would happen if it gets bullish, it would respect this line right here after it broke this line. It would come right through here, settle on top of the cloud, chop around and still respect this line. Okay, that's what we want to be looking for and kind of break the price down bit by bit by bit. All right, now why do I have this cursor line in the middle there? It's weird. Sorry, I don't know why that's like that. So now let's look. Let's look, for instance, at Ethereum. Okay. Let's look at Ethereum. Let's look at Ethereum against the dollar real quick, because I just want to show you guys how it's been really. Before we had the breakout here, from the bottom point, we had this trend it was respecting. Okay. Basically, we made a low here, a higher low, and then we broke the downtrend resistance line. But then we came back to this line and we kind of chopped around in here until we could establish that we got above the hourly cloud. As soon as this thing got above the hourly cloud, it took off. I mean, literally, you can see it right here. As soon as it established that, hey, there's any kind of a idea that this thing is getting bullish again, boom, it broke right out. Okay. Now, against the dollar, it had been trending up on this support trend for about a week previously. Now, that was kind of an indication that Ethereum was holding its value against the dollar more than it was against Bitcoin. Now, here, this doesn't look as clean. There wasn't much of a support trend. We basically just kind of like bottomed out and found some sort of a bottom in this relative area right around here. But same thing. Once it broke the hourly cloud, what did it do? It respected it. Okay, once this candle put us through the hourly cloud, it respected it for 1, 2, 3, 4, 5, 6, 7 hours. It consolidated here on top of the hourly cloud and gave you enough of an indication that, hey, this thing could be gearing up to continue on. It could be gearing up to continue on. And so that's kind of the first indication there that you want to look to buy the bottoms again. You want to look to, if we can establish here that this thing, we'll just steal this line for a second. Okay, if we can establish here that this line right here is holding support on top of the 1 hour cloud, then we can really look at this thing on like a 15-minute, even 5-minute for placement. Where would we want to get into that move? Okay, and this kind of a consolidative area here. We could have broken the price down and said, okay, this entire move here from where basically the volume came in on top of this 15-minute cloud and pushed it up, the entire thing held 61% retracement right here, okay, at that line. So that line there was the top of the hourly cloud and the 61% retracement of the bullish little push to get us above the cloud, okay? And so now we have a little bit of indication that, okay, this thing just pushed us above the hourly cloud. It's consolidating now on top of the hourly cloud at this blue line, which is also the 61% retracement of this impulsive move out. There's a pretty good chance that we would want to get in here. For an upcoming move to come. Okay? And then, what do? Same thing. You track the price as it goes on each little move that it makes. So here. Now, the price respected this trend line right here. Out here, and then right here, it broke. Right here, when this broke and it went into the 15-minute cloud, well, that was our indication that this smaller move here might be getting a retracement of the whole move. Okay, meaning from where we started here to where we came here. From where we started there to where we went to the top right here now is giving us an idea of where this entire thing from start to finish could retrace to since we broke this trend line. And where did it retrace back down to? The 50% mark, okay, of the entire move. Now, we're still kind of chopping around in this 15-minute cloud, so now let's look at this thing on the hourly again. Okay, so we're still well above the hourly cloud. But that doesn't mean that we're just going to take off here and continue. If you noticed, we were kind of chopping around in the 15-minute cloud without any kind of real verification that we were on the bullish side of it. All over here, this was bullish. Above this 15-minute cloud, all bullish. But when we fell into the cloud here, we started to get a retracement of the entire move and broke this support trend. So now we want to look at it like this. We realize where the price is at right now is still well above the hourly cloud. So on the hourly, it's still bullish. But on the 15-minute, it has to get back above this cloud for me to really think that, we're going to continue on now. Meaning that this thing could chop around in here and fall back down to here and give us a 61% retracement of the entire move. Okay, so let's just kind of map that out where that price would be if it fell to here. Okay, let's just make that a little bit of a different color. Okay, so now if we look at this on the hourly, for us to hit that 61% retracement, we would be coming down here and just kind of tagging the inter ledge of this cloud, okay, and then moving on. So now's where we just kind of wait. We just kind of wait and see what Ethereum wants to do here. Did it take a 50% retracement of the whole move of this little sub-minute move to give us enough of a correction here to push us further, or is it going to drop down another retracement line here and then bounce? So understanding that this thing is overall bullish again now, that it's back above the hourly cloud, if I wasn't in this, I would wait. I would wait right around here to try to buy it. To shake out all these people that bought the 50% line and this little area here and see if we can't get one more little drop down into here and then a bounce out from there for us to continue on. Okay? Because now this is what this is really doing is it's making a small little sub-minute wave that's going to lead into another wave and lead into another wave to start to rally us out of here. Okay, so really breaking it down bit by bit, is going to really help us in our trading and how it respects the support and the resistance that it's already established and how it respects the Ichimoku cloud. Okay, we just for instance, like if this thing falls below the hourly cloud here, then we want to get out of Ethereum. We want to get out of it. If it falls below the hourly cloud, we want to get out of it and reassess it to enter again later because it will probably go down more on the bigger time frames if we break this hourly cloud. Okay, just give me 1 second, guys. I'll be right back in just 1 second. All right, sorry about that. So yeah, we want to basically, I'm always looking for how it's trending and how it's establishing its support in its resistive areas, and then what the relationship is to the cloud. For all time frames, really, like when we look at it, this one like the hourly or the 15, it's more like tracking our trade, and that would be more like for more so for like margin trading. Like if you're going to margin trade, since there's such a small window for error, you don't want to get into your margin trade. You don't want to buy this thing when it's going up here, and think that it held here. You want to basically wait, and see if you can get filled here, or been waiting, here to see if you could have gotten filled. But, my biggest rule being that, like, if I realize the market's going up, I don't buy the market when it's going up. I buy the market when it's coming down, and everyone is either losing money or getting, shook out from fear, and they don't understand that there's another move to come out of it. So as soon as you start buying the market, as soon as you start seeing the market going up and you start buying the market as it's going up, you kind of leave yourself kind of like really vulnerable to having the price come back around on you with like a small little correction or a small little pullback. And that could be okay if you're just depending on the trade that you're getting into. Like, if you think that this thing, if you're looking at the bigger picture and you're saying, okay, Ethereum could go to, 0.075 or 0.08 in the next 2 weeks, 3 weeks, then sure, you could hop in anywhere in here and just kind of on spot, actual like coin price, not on leverage. You could hop anywhere in here and just kind of be like, cool, I got my seat, I don't care if it drops down to 400 right now. I still, feel like my analysis is leading me to higher prices in the next coming weeks. So you could deal with that little bit of a, looking at your balance and seeing, oh, I bought at 410, now it's at 405, and just kind of deal with that. But if you're trading on leverage, you can't really play like that at all. You have to really wait to get filled and get your buys filled when everybody else is selling off at like the extreme point where you think that it would hit. And so for me, that would be, in this area right here, about the 61%, because we're so far above the hourly cloud here still, and we've only come down here to the 50, and we're not really like just rallying away from here just yet. So we could very well get another little tag down here to this, which would kind of give us something like, like an ABC correction almost, where we come down here and do like an A, B, C, something like that. And so I would wait here. And if I don't get filled here, then hey, I don't get filled here. I look for the next best place to get filled. But I don't want to chase the price. I always want to break the price down. So here we could break the price down again and say, okay, we made a high here, a lower high, another lower high. So let's drag this line right over here like that. Paint it red, where that's now our resistance. Okay, so now we've basically done the same thing. We trapped the price between 2 points where it's either got to show itself to us. I mean, really, it's either going to not break this line right now and have to retrace down a little bit more to the 61 where we would want to get filled, or it's going to break right through this line and show us, okay, this little correction is over. We're going to make another high, a high that's not a lower high, not necessarily a higher high yet, but we broke that trend of making lower highs, if you know what I mean. Like if this thing comes out of here and tags to like this point right here, then we just made a high that was higher than the last low higher than the last high. I'm saying the one before it was a little bit lower. So we're kind of breaking that small mini corrective downtrend. So breaking the price down bit by bit by bit, guys, is really the success to margin trading, because you don't want to just look at margin trading like we look at the analysis of the market for the bigger moves, because there's really, for instance, when we realized that Ethereum turned around here, okay, and it broke the hourly cloud, okay, this was the only place that you could have gotten in on margin to hold for the really long, the bigger picture. Meaning that if you're going to trade this thing on margin and you get in here, by the time the price goes here, 15%, if you're trading like 33 times leverage on BitMEX or something, you're up like maybe even like 300-400% in your trade already, just in this little move from here. So that means like if you put 1 Bitcoin in here, you're up like 4 Bitcoins, let's say, by this point right here. And by the time it got to 0.08, you could be up 40 Bitcoins. But that's because you planted yourself right here and just held. And to be able to do that, you have to hold through all of the ups and downs. Meaning that you're going to look at your account and you're going to say, cool, I'm up 4 Bitcoins. And then you're going to look at your account again and you'll be like, oh, I'm only up 1 Bitcoin. Okay, and then you're going to look at your account if it comes down here and be like, oh man, I'm only up 3/4 of a Bitcoin or half of a Bitcoin. So how you deal with that in your own personal trading style, you'll come to terms with. You know what I mean? Like, for instance, with myself, I dealt with that too many times in Forex where I tried to plant myself for a longer move and I didn't take the profit off the table, and then the price would come right back around and either stop me out or give me very little profit. So what I learned from that was when there's profit on the table, take it. Literally, take it. If you're trading margin and there's profit on the table, take it. If you understand Elliott Waves and how they're going to unfold, and you realize that you reached a point where, like meaning, if I bought down here under the cloud in anticipation that this thing was breaking out, then yeah, I could get into a leverage position here and just hold it. Just hold it and feel pretty confident that my entry will not get visited again. Now, sure, I'm going to look at the price and I'm going to be up 6 Bitcoins, only up 3 Bitcoins, only up 2 Bitcoins, and then maybe up 4 or 5 again as we go through the whole ebb and flow. But there's only so many positions, only like so many seats that you could like get in safely and do that. And that would be like, your right as your sub-minute 1 wave is forming, or your 2 point of your sub-minute wave. Because if you buy like, this one isn't the prettiest sub-minute waves here. This could even just be like a 1, 2, and then this is the whole 3. This is the 4 that's kind of testing this top area. And then we're kind of getting the 5. It hasn't really shown itself yet. But like, for instance, if you would have bought here on leverage and you didn't take your profit here when you were up, 2-3 Bitcoins, right down here, boom, you have no profit. Your profit's gone. Or you're even possibly, if you bought too high right here, the difference between right here and back down to here, you could be liquidated. Okay, so tracking the price really and compartmentalizing it like this, where you're like, all right, we had a support trend here, we broke it. We're making lower highs, let's track it. Okay, we could fall down to the 61%, let's track it. That would be where the hourly cloud would still be a respect of the cloud. Cool, that looks like it would be a good entry. Okay, so you really want to like break down every single move that the price is going to make, depending on what kind of trade you're going to take. This is like really watching how it respects these levels and these price lines and these price points. You have to do that if you're going to trade on leverage. You really have to, because otherwise you're just kind of like guessing and holding and saying, okay, I hope the price doesn't come back to where I got in, and I hope that I can get out higher, with 30, 40, 50 times returns. And like I said, that can happen, but you have to get that right seat for the journey. You have to really get the right seat for the journey. So, if you're going to do leverage trading, really break it down on like 15-minute, hour. Look for your retracements of every single impulsive move. Map out where it was riding on support, where it's meeting resistance, and then determine where you want to get in your trade. But never chase the price, especially on leverage, because if you bought right here chasing the price on this bounce, right here, thinking, okay, this is it, we're turning around. Right now, your account could very well start to be going negative. And by the time it does do the 61% retracement, you're liquidated. You lost your money. So, there's a lot of money to be made on margin trading, but you have to really, really be very precise, very patient, and compartmentalize the price. Break it down into small sections of what you're looking for and react to it. Okay? Now, you don't have to use that same, precise strategy for looking for larger moves in the market, that are going to happen on and just actually buying the coins, like we're doing with some of these middle cap altcoins, for instance. All right, let's look at some of them. Just to point out here, also, when we look at the 6 hour here on Ethereum, let me get rid of our little drawing tools here. We can see that this thing has just done a small little wave trying to get itself out of here. Okay, we're trying to get ourselves out of this downtrending area, and we're still not above the 6 hour cloud. But I'll tell you this, once this thing gets above the 6 hour cloud, like if we did a little sub-minute wave here, like if we just did a little 1 and we're doing a little 2 and we're going to come back into this area and continue on, when this thing gets above, okay, it looks like we're losing our 6 hour strength here, but we could very well oscillate right in this area. Like look how we're kind of, our strength is trending up. Okay, look at this right there. Okay, so I'll be looking for that on the 6 hour too, to see if we can't get a crossover here on the 6 hour, right around here, and see if we can't keep this strength trend that we've been going on right here. So if we get something like that, a turnover right here, and this thing pops itself out above the cloud, get ready for another impulsive move. Okay, because it's getting a footing above the 6 hour cloud and a turnover of strength here in this area, where that's what it's looking to get. This thing is looking to get back above the clouds on the higher time frames. It already did it on the hourly, and now it's got to work its way up. Okay, let's check the 4 hour. Okay. The 4 hour still also not above the clouds yet. Okay, so I'm going to steal this line here and just kind of put it right here and say, okay, that's the price point above our 4 hour cloud. How does that relate to our 6 hour cloud? Basically just about there as well. Okay, this thing needs to get above anywhere in this area. I'd say even like right here for the 6 hour bigger time frame, and then how it would push through the 4 hour if it got above the 6 hour here. So this thing's looking for a place to gain its support as it goes. Okay, and once it gets above the 6 hour cloud, boom, that's going to take off. Okay, let's look at that and how, for instance, XMR. Okay, XMR, same story. Working its way out from the bottom, from this retracement point of the whole move, okay? Actually has been riding on a nice little trend here. And where's it trying to work its way here? Up on top of the 6-hour cloud. Now, when I look at this and I say, okay, Monero has been trending up here. Our 6-hour strength has been getting stronger, trending up. Trending up, which looks like we're getting another cross right here now. Let's check out where we're at on like the 12-hour. Sorry guys, TradingView has been loading a little slow lately. It's weird because it seems like, someone else pointed out to me, it seems like it's only like the 12-hour and the 6-hour that it loads kind of slower. Okay, here we go. Same story. Here, look. We're working our way. We're almost above this 12-hour cloud. If we get a nice footing here, we can kind of consolidate in this area, it would be very likely that this thing was going to push off of this 6-hour cloud now. Okay, push off and away and create a nice impulsive run. This hasn't really gotten impulsive yet. It's turned around. It's broken the wedge. Held a retracement here. Broke this downtrend. But now we're just slowly grinding up on this little trend right here until we get some good footing above the 6 and 12-hour clouds that we can push off of. Okay? That we can push off of. And we see that in everything. Okay, we see that in all these coins. Like, let's look at, for instance, library. Let's look at library. Where is it? The library is doing pretty good for us right now, and I assume that it should continue. Now it's basically, a little bit different of a chart, but same story. Same story. Where, okay, on the 12-hour, it didn't even have to get above the cloud. This one more on the 6-hour. Needed to work its way. So that's what the price does. Like, once the price gets under the clouds and trades under the clouds, it has to find some sort of support footing back on top of the clouds for it to continue on. There we go. Okay. Now look. Once this thing did an impulsive move up and did a correction move down, it held a whole, basically from where it broke here to where it went. Come on. Right there. Just about 61% again, right here in this buy area box. Okay. Just about tagged the 61%. This is where we were looking to get, to get in on a retracement. Now, I had this marked out just how I have all the rest of the charts marked out as for the retracement points. But you guys that have been with me for a while, we mostly got into library coin here. And then when I saw it breaking the wedge here, or breaking the flag, this one was more like a flag. When I saw it breaking here and I had missed this retracement point, then I was saying, hey, this is a good place right here, 42 to 47, 5,000 max. Because what's going to happen is it's going to come to the top of the cloud here. Okay? Like it did. Boom. Break out. Get on top of the cloud. This next 6-hour candle, what did it do? Sold down to the cloud. Found enough strength right there to push off of the cloud. Okay? Our little retracement came back down. Didn't even get to the cloud. Pushed back up. Okay? And continued on. So, using the cloud as reference on all of our time frames, it's kind of like it's like a real quick glance of a cheat sheet, really, guys. I mean, it's such a good indicator that to tell you like trend, your support and your resistance, like where your price could get to if it maintains a certain level for a certain amount of time. Like we saw that on Ethereum. Let's just go back to Ethereum real quick here on the hourly. Now Ethereum, this is what I mean. Like this is here showing us if we get above that 6-hour cloud, it's going to be kind of the same story with library coin. All right. Now here, notice what Ethereum did here. Like this cloud always looked like this. If this didn't change, like this looked like this when Ethereum broke. And so notice here that we have the ledge of the cloud right here. And then when this was here and we were looking at all this, the projected future of the ledge of the cloud was here. So that right there, you have to understand that all of this was not here all the candles and all the trading action was not there, but it showed us the cloud, in the future was there, just like it's showing us the cloud in the future here. I'm pointing this out because right here, when we were consolidating at these levels at the top of the cloud, we had an indication in the future that if we maintained price at this level, that the support was going to be moving up to this level. And so the price actually followed the projection of where the support would be perfectly. I mean, it showed us here that if we consolidated in this area and we could maintain that price, that our hourly support was going to grow and be higher at this level. Okay, so really, I like I said when we first started talking about the cloud, there's a ton of other things that you guys could research on your own and see if it's what you want to use with the cloud. Okay, and that's how all these lines can give you an indication of a trade. Okay, but for me, I don't like to count on one indicator or another to tell me, hey, I should take a trade. Like basically the Ichimoku cloud is an indicator, but it also has trading signals built into it. Meaning that if you study Ichimoku cloud enough and you really want to, these lines here, how they relate to each other and how they cross each other, is going to give you a signal of a trade, basically. But the way that I trade is I don't like to use indicators to signal me for a trade. Like I feel like if I do that, then I'm kind of relying on what the Ichimoku cloud is telling me to take a trade one way or another. And that would be the same as saying, okay, stochastic RSI crossed down the bottom here, let me buy. Oh, it crossed at the top here, let me sell. It doesn't really work like that. And I've observed other traders that trade Ichimoku, and I've observed their action that they take based on these lines crossing and the signals that they get from them, and it's the same. It's only like maybe 40% accurate, to really rely on one line crossing another to give you a trade signal. Okay, I don't do that. I basically, I get rid of all that stuff, and I just want the cloud. I just want the cloud for its simplest form to tell me the simplest information to add as confluence to my strategy. Like when we're looking at this from a Elliott Wave perspective and Elliott Wave analysis, we already have a certain idea of how the market structure is going to be, how the market's going to unfold. We already have that little blueprint in our head. So we just want to use Ichimoku to tell us, hey, you're right on track. Hey, this is still above the clouds. This is still bullish. Oh, hey, we might get a bounce right here on the cloud. Oh, hey, we might run into resistance at the cloud now that we're under it. Those kind of things, like in confluence with what we're already looking for. But I don't ever want to take any little indicator by itself and have it tell me, take the trade long or short. Because there's all other factors that need to be taken in mind when you take a trade, whether you want to go long or go short. So, keep that in mind. I mean, I would suggest, if you guys really want to study it, yeah, get into it, fool around with it. But like I said, for me, it just makes the chart look cluttered and with lines that I'm not using because they're telling me to take a trade that I may not agree with my other analysis, So I just keep it real simple. I just keep it real simple and keep the cloud running there in the background on all time frames to tell me, hey, where are we at? Where are we at in relationship to trend, in relationship to the price, and kind of it gives you like an extra sense of confluence. And it really does help out because if you have your Elliott Waves starting, like we just pointed out on XMR, for instance, we have a new wave starting. So when we look at like the Ichimoku cloud, it gives us a little bit indication that, hey, yeah, you're right. This thing is starting, did break its downtrend. And this is a beautiful example right here on XMR because we can see clearly here this entire corrective wave, this thing was not trading above the clouds at all. At all. This entire correction, boom, under the clouds, under the clouds, under the clouds. But right here, when it hit here and it kind of consolidated up here, boom, that was enough of a move to break the clouds and then come back down, hold the support trend that it had started, right here, okay? Hold the support trend, and then tag the breakout line, and then start to respect the hourly cloud. Respect it, respect it, respect it. So now we're trading on the upside of the cloud. We're trading above the cloud. So, you don't have to have the cloud there if you don't want. You could just basically take, what you already have figured out about the market and said, okay, Monero made a huge impulsive move. So, I'm just showing you guys this because trading is a lot of like putting a puzzle together. It's like putting a bunch of puzzle pieces together until you see the actual picture of what you're making, And Ichimoku cloud is just another piece of the puzzle that kind of shows us, oh yeah, the picture has come a little bit clearer. But we could see that here. We could see that here when we measure the whole move. We could say, oh, okay, this entire move went up, had a nice impulsive cycle, had done a nice corrective cycle. It held a 61% retracement. Looks like it was wedging out. It broke the wedge. Okay, so you have a couple ways that you could get into this trade here. You could say, okay, this thing held a 61% retracement. Here looks like a good place to buy. Okay, this thing broke the wedge and now it's selling back down to the wedge line. Boom, here's a good place to buy. Oh, this thing is trending above the clouds now. Okay, let me buy the lows. Let me buy every time it comes back close to this line, comes back close to this cloud. Let me try to get in it because now we understand direction. A lot of this game, guys, is really just understanding what side of the trade you should be on. I mean, trading is not rocket science. It really isn't. It's just a lot of discipline, patience, and understanding the geometry of the market and understanding the relationship that the price makes in relationship to trend and Fibonacci. And then you can go a little bit deeper into it, like, with my whole philosophy behind how the market runs, and that this is just an emotional game. This is just an emotional game, a psychological game of loss, of fear and greed, and understanding that and how human emotions is going to make an impulsive move that can be measured. It can be measured. It can be measured with a Fibonacci tool because Fibonacci is just like it measures everything else in creation. It can measure our emotions. It can measure the emotional print that we leave on a chart. So, we're kind of digging in and looking at the market in a whole different way. I mean, this strategy that I have here, it has simplified a lot of, junk that people go through in the market of trying to understand why the market reacts and behaves the way that it does by just simplifying it and saying, there's a natural order to life and creation of how everything will grow and decline, including the price that we print on the chart. So, we're basically looking at the market through a looking glass of what we're expecting from the normal cycle that repeats itself of fear and greed and the emotions of the traders. We already know that. We have that blueprint in our mind. And we have the idea of how that's going to unfold through the Elliott Wave formation. And then now we use Fibonacci to tell us where to get in and out of those moves. And then we use things like stochastic RSI strength, support and resistance, Ichimoku clouds, median average convergence and divergence at times, exponential moving averages, to kind of just tell us, hey, you are right. You are in the right direction. We're already expecting that this was a big 1 and a big 2, and we're going to get a 3 out of it. I mean, we saw and we're expecting this 3 to come, this next wave to come out of this move long before the rest of the market did. We almost expected it too early, where we were trying to get into it too early. Okay? And that's another thing too, when you guys practice this analysis, just to understand that you're going to see things happen, or you're going to see the possibility for things to happen in the market long before other people do. Okay? Long before retail traders do. Long before other people that practice other strategies do. Because understanding Elliott Waves, we are understanding how the market is going to unfold. And we have a basic idea and a blueprint of how that's going to be from the very beginning. Okay? You know, like we understood here that, you know, okay, this had a big impulsive move after it left behind a downtrend in a market cycle. This big impulsive move is probably going to be, you know, in several waves. And, you know, it wasn't until this entire thing printed that we could see, oh, okay, this was the big 1 wave, this was the big 2 wave, now we're getting the big 3 wave. But, you know, now more people are starting to figure it out. You know, they're starting to be like, oh, there's another wave coming. One of you guys, you know, sent me an article on Twitter yesterday pointing out that there's, you know, an article that came out in Crypto Coin News saying that, oh, this whole altcoin, you know, party is bound to continue based on, you know, analysis off of Elliott Wave theory, you know, based on the fact that, you know, this is new cycles happening of impulsiveness of fear and greed. And, you know, it's old news to us. We spotted it a long time ago. But I just want to tell you guys that, like, as you go forward in your trading, don't be surprised if you spot moves way before other people spot them. But don't let the fact that there's that gap in time between when you see it and when it actually happens, don't let that ruin your analysis, and don't have that doubt yourself. I just say that, for instance, because, like, look at Ripple. Okay? Look at Ripple. Okay? You guys that have been with me for a while, you guys realize that, you know, I spotted Ripple happening at like 500. I mean, literally, you know, like Ripple to me, the first time I mentioned it to everyone and said, hey, you know, we should start buying Ripple, was at just about 500. You know, 500, 525, I think was the price or so. With and even said that this thing is going to go to 2,500. And when I said that back at 500, most of the market and people that I would share that idea with had no idea. You know, when I saw it breaking its downtrend in its market cycle right in this area here, I understood what was to come because of the Elliott Wave analysis and the market cycle analysis and the market psychology analysis. I understood that, hey, we're breaking out of a long downtrend here, that once it breaks out and we get some strength behind it, we're going to start a new market cycle, and we're going to start revisiting the extension points back up, with the retracement points back up, which would have been first 2,500, then 3,800, and then, you know, 7,000 was one of them, but it was higher up the ladder, and we're just moving there faster. But the point I'm trying to make here with you guys is that we have a very unique way of looking at the market, a very unique strategy that, I mean, it's not so unique. Like, there's a lot of people out there that know it, but not many people practice it. A lot of people don't believe that there's some sort of a predestined amount of waves that are going to come and certain retracement points that they're going to hit. You know, a lot of people think that Fibonacci numbers are just mumbo jumbo, or the energy of the moon is just mumbo jumbo. You know, like people don't really understand that there's something bigger going on here. So as you practice this strategy and this analysis, and you go on your own journey in trading, just be mindful that you're going to spot things happening way before other people do. But stick to your analysis. Like, really, stick to your analysis and kind of understand that everybody else doesn't have to see it right now. You know, I mean, they don't have to see it right now. Let them see it later. Because everything that we see in the market with Elliott Wave theory leads into some other pattern that retail traders are going to trade. Simple as that. And most of the time, that's either going to be a bull flag or a bull pennant, meaning that our wave 1 will go up and then our wave 2 will come down, and it will consolidate or correct and create a pennant or a flag or some sort of recognizable trade pattern that breakout traders will trade. Or after that happens, our third wave, when it comes up and it hits the peak of wave 1 and does a pullback, it creates the cup and handle. And then retail traders will chase that. And the perfect example of that that's going on right now is going on with both Nautilus coin and Library coin. Meaning that we understood that we're going to get, even here on the daily, okay, we can look at it. Okay, that we understood that we're going to get a nice 5 set of waves out of here. That we broke free of this daily cloud, and we're going to get a nice boom, 1, 2, 3, 4, 5, staircasing us up probably to 16,000, guys. Like, when I put that target out there, I wasn't joking. Like, this thing could very well get to about 15, 16,000 in the next coming weeks, which is like a 5 times return from the signal the other day, and like, you know, even more of a return from where we got in it the first time down here. But our analysis is leading us into things that we see way before other people see. Okay, meaning that when we saw this impulsive move happen and come back down, we're looking at like, okay, this is a 1 and a 2 happening. But the rest of the market doesn't know that. They don't know that this thing's going to continue until it breaks out of the bull flag, and then they chase it. They don't know that this thing is going to continue on even higher until they see that it broke a cup and handle on a lower time frame. And those are the kind of things that, like right here, this thing made a cup and handle. Let me look at it more like a 6 hour. So we're going to see things basically right about here. Meaning that, you know, you can kind of see it here. The cup and handle doesn't always have to be at the same heights and the same highs, but it's basically the same principle. I don't trade cup and handles because, you know, we see things like this happening way before they happen. But other traders need something to latch onto. So they trade this kind of stuff like that, where, you know, it makes a cup and a handle, and then, you know, right here when this point breaks, get rid of that line so it's not so confusing. Right here when this line right here breaks, you know, it's tea time. You know, cup and handle broke. So, you know, other traders need something to latch onto that they can say, oh, you know, now it's time for me to get into the trade, because they don't understand the geometry of the market. They don't understand the mechanics of the market and the psychology of the market. I mean, understanding what we trade, how we trade, is the golden key, guys. I mean, we're seeing things and expecting them to happen way before other traders do. I mean, way before other traders. But what that's going to have to do is you have to recognize that and add even more patience to your trading strategy. Because, you know, even myself, when I spot things happening, like for instance, back to Ripple, when I saw Ripple was a buy at 500, I thought that it was going to make that move within a week or two. Well, it took 3 weeks. But in that time period, you know, there was time that maybe even I doubted myself to say, you know, okay, you know, Ripple hasn't made it above 1,000 yet. Boy, you know, it's taking kind of a slow time, you know. And in that time window, you maybe even start to second guess yourself and second guess your analysis because things aren't working out so fast. But that's what I want to remind you guys. With this analysis and with this strategy, you're going to be seeing things way before the herd. Way before the herd. Okay? And I just want to, I have to go a little early today, but I just want to point it out to you about how you're going to see things way before the herd and how to just have patience. Okay? And then I'm just going to finish it up here with this chart that I made on Bitcoin in 2015. Basically, based on this analysis, and sorry, I gotta get through all these charts here. Based on this analysis of Elliott Wave analysis and market cycles, okay, and the fact that you can see things coming really early, guys, really early, okay, and that's why I made this chart in 2015, you know, saying all these Elliott's were forming. Here we go. BTC to $3,000 within 2 years. Okay, I made this chart in 2015 when the price was maybe like, I don't know, we'll have to look at the chart here. It was like maybe like $300, the price, based on the market psychology. Simple as that, guys. I mean, like, just taking some simple idea of knowing market structure and how it's going to unfold gives you an idea. Okay, right here. We have our market cycle for Bitcoin right in here. And when we had this move right up in here that broke out from this downtrend, it's almost like with this increasing volume, it's almost like Ripple when you look at Ripple on like a monthly chart or whatever this is. This is like a monthly chart, right? Yeah. You know, this point right here where you have a long downtrend and then boom, it pops out. That first move where it pops out, that is disbelief. That's when the disbelief happens in the market where everybody's like, whoa, I thought this thing was dead. Okay, so this chart was made over, you know, was it 29th of November 2015, based solely on market psychology and the repetitiveness of the pattern. Okay, and as you can see, I mean, we didn't reach 3,000 yet, but we're working our way there. Okay, like, you know, this is taking longer to get up into this top of the bubble here than it did the last time, because, you know, there's more people playing, there's more coins that have to get distributed. You know, as this market cycle here was a certain size, it took a certain amount of time. Then this one was a certain size, took a little bit longer. Now this one is a bit bigger, it's taking a little bit longer. So, you know, this chart was basically just made for documentation purposes. You know, basically go to about, through another bubble phase, taking us to about 3,000, chart for documentation purposes. You know, because this wasn't to lay out all the Elliott waves in here. You know, we played those on smaller time frames. But just to show you that you're going to see things way before other people see them. But stick to your analysis. Really, stick to your analysis, because it plays out over and over and over again, because what we're seeing is the same repetitive emotional cycle. Whether it's on a 5-minute chart or whether it's on a monthly chart, that we're going to look at this thing, you know, in the next 6 months and say, okay, yeah, it did reach to about 2,700. Okay, and you have to understand the emotions too. Like right now, Bitcoin, like I pointed out to you guys before, like when it hit this point, it was disbelief. When it hit this point, it was hope. Now we're ramping up here to the point where we have sold down several times under 1,000 and pop back up, pop back up. So now we keep, you know, we just hit about 1240 again and sold back down. But if we, you know, hit our retracement of where we're thinking of, like, let's say 1115 or so, and we pop back up to, like, you know, 1250, 1300, think about what that does in the psychology of the market. It paints optimism. Optimism in the market. Optimism leads to belief. Belief leads to euphoria. Thrill. And thrill leads to euphoria. And those are the emotions that need to get painted yet for us to reach that 3,000 type area. Okay? Right now, we're still painting the optimism in the market. And so now when we look at Bitcoin and we say, okay, when's Bitcoin going to get there? When's it going to get to those higher levels of price? It's going to get to them when it paints optimism in the market. Simple as that. The price has to dump down so many times and bounce back up and continue to grow to where the market's just like, wow, this isn't going down anymore. And people start to get really optimistic about Bitcoin. And then it makes a higher high. And then people start to believe, wow, this isn't going down. And then they start to buy. And then it's on the news how it's the best investment ever. And then the herd comes. And that's when the thrill comes and the euphoria. So we need to, for those emotions to come, this needs to paint itself exactly like it's doing. Exactly like it's doing. Where it tries, boom, gets dumped. Defies being dumped. Boom, gets dumped again. Defies being dumped again. To the point where people are just like, wow, Bitcoin's not going below 1,000, is it? And then they start to get optimistic, and then they start to believe, and then we start getting pushed all the way up in price. So I'm sticking to my analysis from 2015. Like, we're going to go close to around 3,000 within 2 years. And that has been about, so November of this year would be 2 years since I made that chart. So I'm giving myself, you know, until November to be on point with that of, you know, getting close to the 3,000 mark. And how are we going to track that along the way, guys? Through Elliott Waves, Fibonacci numbers, support and resistance, strength, relationship to the cloud, trend, everything. We're going to track the movement and price on Bitcoin and on all of these coins that we trade. Okay? And, you know, you don't have to, like I was saying earlier, you don't have to be so specific on tracking the price and compartmentalizing it on every little move on like a 15-minute, unless you're trading leverage, really. Because you could literally, you know, buy the lows and just hold for a longer time on a lot of these. But when you start trading leverage, you really got to be really ninja on your entries, and make sure you don't get washed out while you're trying to get a seat for the long ride. All right, but that's it, guys. I got to leave a little early today. We got some holiday visitors and stuff, and we got a lot of plans today. So, but I'll catch you guys on Monday. And until then, keep stacking it. I feel like our plays are going to do pretty good this weekend. Library coin is set up to do pretty good. Radium looks like it's going to jump up. Nautilus. Ethereum, XMR, they're all moving. Everything's looking pretty good. So, yeah, you guys have a great weekend, and I'll see you on Monday. Take care.